Wonderful.
All right, so if you're brand new to the live trading room, what we try to do most every day is kind of a mid-market summary. Lots of discussions going on throughout the market day between myself and the team. Michael's usually, providing commentary on a regular basis about what we see on uh, different indexes, and then most recently we've been trading a few stocks also. But it's good, in my opinion, even as an individual trader, to take a pause sometime about mid-market day and do a summary evaluation of what you see going on. It's kind of a reset for the day. It's an opportunity to see if there's anything you might have missed earlier. Do you have any positions that maybe aren't looking quite as good as you thought originally, or opportunities that you originally had looked at that now may be playing out and setting themselves up for possible trade. So we try to do this most every day. So what I wanted to start with today is I wanted to highlight something that I saw right at the open today, and I actually discussed with Michael, Allison, and Aaron before the market opened. This was a trade on CMG. As I said before, we don't do a lot of stock trades. We typically are trading our indexes, but in the last couple of weeks, been doing just a few more stock trades on a handful of stocks that I have historically traded. And what I wanted to point out is this on CMG, because this can be a pattern that is difficult to recognize and doesn't always play out, but it's worth paying attention to. So when we came into the market this morning, so if you look to the left of where my cursor is, that was all the activity prior to today's open. So you can see that prior to today's open, we were double stacked to the upside. We had 5 and 15-minute support printing. We were double stacked, and we were trading. We closed Friday above 5-minute support. On the 30, 90-minute, you can also see that we were double stacked to the upside prior to today's open. And then also on the 120 daily, we are double stacked to the upside. So that would tell you, as Michael pointed out to me this morning, that it looks like we're going to go higher. And that is absolutely the right interpretation of that pattern. But there was something else that I saw also, and it was that we had a Bollinger Band snap, which I'm going to show you here in just a minute, Bollinger Band snap on the 30-minute chart. Bollinger Band snap on the 30-minute chart. And it was an upper Bollinger Band snap, which tells me that there's a high probability that we could perhaps trade lower. So on the surface, especially if you have not experienced a lot of the trading with AbleTrend or looked at the types of comparisons that I will sometimes do between AbleTrend and bar charts, it may seem like those two are in conflict, and how can you trust one over the other? Well, in my opinion, they were not in conflict. And in fact, I took a trade this morning to the downside and ended up closing it out for a nice profit just in a matter of a few minutes. So why would I take a trade that contradicts AbleTrend? And here's the simple answer. When I looked at that trade this morning, I knew that Friday we had closed at 442. Friday we closed at 442. Well, we know that these stocks and indexes cycle, and even when we are in a rising trending pattern, we know that the stock is going to cycle back down to what we refer to as the sweet spot. It's going to come back down to that level of support before it continues to go higher. It may actually come down to that level of support and break below it, but we're not betting on that. We're not counting on that. That increases the degree of speculation on that as a trade. But the further away from support that we pull, the greater the likelihood is that we're going to cycle our way back down to support. You can see where that happened over here. We were trending higher, got up to a high here, and then we came right back down to support. Those movements are profit opportunities if you see when to take them. Now, I will, on rare occasions, take what I refer to as a counter trend trade by kind of arbitrarily choosing a top, which is very speculative and not a certainty at all, but arbitrarily choosing a top and taking a counter trend trade and try to grab a profit on the way back down to support. But in this morning's case, I saw that we were above support and there was enough room to move back down to support to grab a profit if we selected the right strike for our trade. If we selected a strike that had a delta that would allow us to harvest a profit from that trade. So I looked at that, and then I also looked at the 30-90 minute, and I was looking at the 120 daily, and could see that we had some room to move down to support. So what I want to do is I want to shift gears here just for a minute, and I want to show you the bar chart so that I could correlate to that. All right, so CMG, I'm going to go to a daily chart. Let's go to 1 year daily. Okay. So before the market opened this morning, this is the pattern I was seeing right here. Friday's close was a 2 standard deviation Bollinger Band snap and pressing right up against the 3 standard deviation Bollinger Band. So that pattern right there is a pattern that I like to trade. I like to trade Bollinger Band snaps, and I know many of you follow along with the Bollinger Band snaps. Peter in particular had some really nice Bollinger Band snaps last week and did quite well with them. So I made a decision to take a trade based on 2 factors, and I did not consider my charts to be in contradiction to one another. I actually saw that we're in a rising trend here, which is exactly what Able Trend was showing me. I saw that we were trading up off of a level of support on Able Trend that told me we could possibly cycle our way back down, retrace our way back down to support based on the Able Trend pattern, and that movement would be enough to grab a profit. And the fact that we had a Bollinger Band snap on the daily chart tells me that was a reasonable trade to take. In my opinion, that was a reasonable trade to take. I also knew that I could cover this trade, meaning I could turn it into a spread if necessary and significantly reduce my risk by doing so. So what ended up happening? Well, let's take a look at our orders here, and let's find that trade. All right, so CMG, we filled this morning. We only bought 1 contract. We bought the September monthly expiration 475 put. At the time, CMG was trading around 440-ish, and so we went in the money. And the reason I went in the money is because if I needed to cover this, I would have an opportunity to sell to open perhaps the 470 and create a spread. Or because I went out to September expiration, I could have sold to open the August 475 and create a calendar spread. And by selling to open anything against this spread, it would significantly reduce my risk from 38.90 down to something less than half of that. So I was only trading 1 contract. We're all about base hits here, looking for, $2, $3, $4, $5 profit on a single contract. Take your capital back and recycle it. So if I want to just jump to the chain here for a minute, and I want to also emphasize something that I was considering in the selection of my strike and expiration. And I'm sharing all this with you folks because I think it's a great real-time exercise for you to understand the thought process behind choosing some of these trades. So when I went into the 475, it was about a 70, I think at the time it was about a 78 delta. Anyway, it's a 77 delta right now. So what that meant to me was I had an opportunity that on a move lower, I could possibly take a profit, or I would see a profit develop on my position of, let's just say, 75 cents for each $1 movement lower. I knew I had about $6 of potential movement down uh, to reach the first level of support. And I knew that the Bollinger Band snap pattern was significant enough that even if I traded just back down to the 2 standard deviation Bollinger Band, it would potentially give me that profit, especially since I had such a significant delta. So the summary of this is my able trend charts and my bar charts, in my interpretation, my opinion, were in agreement with each other. Bollinger Band snap on the bar chart, and having pulled up off of support on able trend in a cycling pattern, that it was highly likely that it could cycle back down to support. Okay, so that's the premise for having taken the position in the first place. Second part, I went out to September, which gave me a lot of time, almost 2 months before expiration, for this trade to play out. By going out to September, it also gave me the luxury of being able to sell to open any of these expirations against that September, not only to cover the risk, but also to harvest profits from this trade. Okay, so that's why I went out to September. And then going in the money to the 475 said one of my options would potentially be to sell to open the 470, and create a in the money put vertical spread. So I left a lot of options available to myself. And I want to back up here just for a minute, because I think I misspoke and I said that I left myself open the option of selling to open in August and creating a calendar spread. I didn't mean a calendar spread, I meant a diagonal spread. I would not want to sell to open an in the money August expiration. I would not want to sell to open an August 475, because that is in the money. And in creating a calendar spread, you want to maintain your short strike out of the money as much as possible. So what it would have done is given me the luxury of being able to sell to open a strike that is out of the money and lower than the current price of the index or of the stock. So I could have gone down, for example, to the 420. 420, let's even say the 425. Sell to open the 425, which would be an out of the money strike, which would create a diagonal spread. And the delta value of my short leg would be just less than half of the delta value of the long leg. And that's the ideal scenario for creating a diagonal spread. So that's what ended up happening. That's the thought process around constructing that trade. As it turns out, we got into that trade at 38.90. We closed out of that trade at 41.90, and we were only in that trade for just a few minutes. And it turned out to be a nice $3 profit for us to start out the day. So I really wanted to take this opportunity to emphasize not only the thought process around reconciling the patterns between bar charts and able trend, but also the thought process around selecting my strike, selecting my expiration, and already having in place a thought process around covering that trade if in fact it had moved against me. So that was that trade, and it worked out quite nicely. They don't all work out that way, but I love it when they do. So let me just bounce back here to Able Trend, and let's take a quick look at our indexes. And Michael, if you want to weigh in here too, I know you just took a longer term trade on SPX. What were you seeing on SPX? that told you to go ahead and get into that trade?
Well, on the longer term time frame market, the SPX, S&P, I'm sorry, we have, let me refresh to make sure, but we have a sell signal on the 120 daily. Well,
Hmm.
first of all, the 60 minute 180 chart have a sell signal at 11 o'clock, so it verified itself to go short at 12. So I took a short position there, opened up a long put for January monthly, for January 17 monthly,
Now,
and
why'd you go
then
so far out?
to give myself some time because I've got a longer time frame chart, and
Hmm.
I'm going to sell positions against that as I go along here.
So did you go in the money, at the money, or out of the money for your strike?
Out of the money. Right. We're trading at 21.62, so I opened up the 20.50 for January
Okay.
monthly.
So you gave yourself a lot of flexibility, not only in terms of time, but in terms of creating calendar spread or diagonal spread against that and harvesting profits from each week or every couple of weeks against that trade as we continue to trend lower.
Yes, sir.
So you put a lot of weight on the sell signals on the longer term time
I
frames.
do. I do, especially on the 120 daily. I mean, the 120 daily now is starting to, the signal's there. I just got to wait till 2 o'clock Eastern time. It's at 12:30 Eastern now to make sure it's going to print and verify. And if it does, I feel real confident about that trade.
Okay, excellent. I'm not showing a 120 daily here, but people in the room understand. I'm showing a 30/90, and the sell signal came on at 10:30, and I'm showing a 61/80, and sell signal looks like it came on at 11. And you said there's a sell signal on the 120 daily also?
Yeah, 120 daily that started at noon, and I just refreshed to verify that, and it's still there.
Okay. All right, so let's look at our shorter time frames then, which is what we usually take our signals off of. And you can just see this red waterfall on SPX on the 3.9 and on the 5.15. And this is really what you were talking about before. You know, I think you referred to it as shooting fish in a barrel, where you really wait. Ideally, you wait for all of your time frames to align, which is what has happened on SPX. And
Yes.
when all of your time frames align, you have a heightened sense of confidence in taking a trade, but it doesn't guarantee that it's going to work, right?
That's right.
So you need to consider strike and expiration. And I just want to summarize this for folks. You chose January just to give yourself plenty of time, and it was an affordable option for you.
Yes.
And so it worked for the amount of capital that you're willing to put at risk in the trade. And you chose a strike that was out of the money, where normally, I know your trading style, Michael, you will normally go in the money
Yes.
when you're trading to the downside, and you normally go pretty deep in the money.
I do.
And you went out of the money in this case, a different approach because it gives you complete flexibility to sell strikes against it uh, each week if you want to, leading up to
Yes.
January, and you can harvest a tremendous amount of profit, um, accumulating week to week or month to month against that
That's
trade.
right. Yes.
So the takeaway here, folks, is Michael has a strategy. It's not just I see a signal and I'm going to jump in and then wonder what I'm going to do with it. He's got like three different levels of thought process that he went through in choosing this trade. First of all, he waited for that until all of the time periods align. Now, we don't always wait for the long-term time periods, but in this case, why would you take a pass on it? So that was number one. All the time periods were aligning, and he jumped in and took the trade. But he knew that he wanted to go out of the money so he could sell to open and take profits against it along the way. And he has a plan of what he can do if it reverses on him. He can actually convert it into a put credit spread if he wanted to, or a long put debit spread, and dramatically reduce the amount of risk he has on it. So I think that's very well played, Michael, and
Thank you.
I love the way that pattern is shaping up.
Yes. Me too.
So this, in my opinion, is one of the benefits of being in the live trading room. um, people who want to trade, people who have decided to either earn a portion of or all of their income from trading, don't necessarily want to remain isolated, but they can sit in the live trading room. They can hear our discussions. And I want to be very clear about this. We don't have an expectation that everybody agree with our premise or everybody agree with every one of our trades. You and I don't always agree. Is that right, Michael, on
That is
trades?
correct. That is
And
correct.
and yet, if I disagree with your trade, you're still going to be committed to the trade that you're taking because you know why you're taking that trade. That's really what the value here is. Understanding different perspectives and understanding points of view, but always being convicted to your trade and knowing why you took that trade. And more importantly, how you're going to protect yourself if, in fact, that trade doesn't work out.
That's correct.
I like.
Martin, and just to bring another point up, I've been trading, for over 20 something years, but even though like just a bit ago I talked to Allison about a calendar trade, and so it's just it's easier to bounce ideas off of other people in the room and her, and it just makes trading to me more fun and more easy, and give yourself some confidence, because I saw the same thing that she said, and so it made it feel, just gives you some confidence. That's all. And I like to trade with other people also. Just boring.
Well, and I think it's fair to say too that there's a reasonable amount of data that we're taking in. First of all, we're looking at um, three different indexes on a regular basis, and now I'm looking at half a dozen stocks also. So there are a variety of things to look at. So different equities and different time periods, and you may see something that tells you that now's the time to take a trade. And if there's any hesitation, and like you did today, you bounced your thoughts off of Allison. Oftentimes, one of us will point out something that the other maybe had glossed over, had not seen, and that's the only purpose. I never try to talk anybody into or out of a trade, and I know you don't
That's
either,
right.
Michael.
No, no.
But once you're in, then it's your trade. You own it, and everybody on this team will provide support in terms of did you consider this? I see that. Might want to consider that. Not trying to influence, but just share data and share information. And that for me
Yes.
is invaluable.
Yes.
Let me take a quick look at Priceline while we're here. Because I want to use this as an opportunity to emphasize one other thing. We held a Priceline spread trade coming into today. Now that spread trade was a result of having gotten into a long put. In fact, it was a 1300 put. And then later on in that day that we opened that, we wanted to cover it. And I actually turned it into a diagonal spread by selling to open a 1220 put against it. The following day, I rolled the 1300 down to 1290 and still held a diagonal spread, but took a really nice profit when we did that. So today, with the move down on Priceline, I had an opportunity to just close the spread. Now, I had extended expirations on these. In fact, let me just double check what they were. I had October, August. So you might argue, why wouldn't you just hold that trade because the August was out of the money at 1220 and might still turn into a great profit. October on the long legs. The answer was simple for me, that the pattern was not crystal clear to me on Priceline. And I decided, because I could exit out of the spread after already having taken a profit last week for basically even, no profit, no loss. It was actually a $2 loss, so no big deal, and take all of my capital back. So rather than continue to manage a spread that was created as a result of having covered my original long put, I decided to go ahead and take all my capital back and start over. And I think that that's something that we should consider more often as traders, is if you have a trade that you ended up managing and you can get out of it at even, there's no reason necessarily to remain committed to that trade if you can take your capital back. So I went ahead and exited out of the spread. And what was interesting is I immediately turned around. So I closed that spread for 39.80, and I immediately turned around and used all of that capital plus a little bit more and put it into a long call on Priceline, a long call. And the reason was because we had pulled away from resistance. This was kind of an inverse trade from what I saw on CMG at the open. We'd pulled away from resistance and we were showing a Bollinger Band snap on the 30-minute chart. So took the call and got in at 49.90 and got out at 52. So after all of that, I used this capital in a way that I thought was more productive. Was able to harvest another profit out of that, just $2.10, not a big deal. It's just a base hit on that, and still have all of my capital back on that trade. So let me flip over to bar charts here, and I want to just share my usual perspective of kind of a macro view of where the indexes are. All right, should be able to see my bar chart now, and I'll just show you here real quick. Priceline, the Priceline 30-minute. Here it was showing the Bollinger Band snap right here. Took a nice little quick profit on that move up before it started to drift a little bit lower. All right, so I'm going to start with NDX. We'll see how much time we have. I may not do all three indexes, but I think it's important to do NDX at least. So NDX, what did we talk about on Friday? We talked about the fact that we are trading right at this declining line of resistance. It's mostly a sideways resistance line, but it's got a slight downward trending. And that was the third day that we had stalled out at that line of resistance. Now today makes day number 4 that we appear to have stalled out at that line of resistance. Today's high was 46.6708. Friday's high was 46.70. So we don't have a setup for a bearish divergent bar, but you can see again that we have a fourth day where we tried to move a little bit higher and we just stalled right at that sideways line of resistance. And now we're trading lower in that range. And what's interesting about that for me is this rising level of support in the cycle that's all been sitting inside this channel. We may possibly be breaking below that support, but I may need to take a look at the placement of my support line there. Let's go to I'm going to go to a 20-day time period here so you can see the entire cycle. We've been in this cycle for quite some time, and you can see each of the time periods where we've nudged right up against that sideways level of resistance. And you can see a little more clearly in this time period how we came right across these levels of support. These are natural levels of support. These are where the market defined a turning point and headed higher, and we're trading right at that level of support now. So if we zoom in, we can see that we're trading at that level of support. We're getting tighter and tighter into this wedge between sideways resistance and rising support. We're going to break out of this one way or the other. I don't know which direction we're going to break, but we're going to have to, well, we're going to have to wait for the market to tell us which direction. If I take a look at our more advanced studies, I continue to see momentum is declining significantly. That would tell me that there's a greater probability of a breakout to the downside. But again, I'm not predicting that. All I'm doing is looking for very short-term signals on my Able Trend charts and taking those trades to the upside or to the downside, depending on which direction they're pointing to. When you back up to a one-year view, though, other than zooming in and seeing that we're trading right at that line of resistance, it makes perfect sense and seems logical to me that at some point in the near future, And the near future could be in the next hour, or it could be in the next week, or sometime after that. But it seems logical to me that sometime in the near future, we're going to see a declining cycle form, because we've been in this rising cycle since the 28th of June. We're getting into a time period here now where we've got an extended rising cycle and a fairly dramatic rising cycle in terms of movement from the low on the 27th of 41.79 to a high on Friday of 46.70. So almost a 500-point move from the low to the high in this cycle. Still looking for that declining cycle, but haven't seen confirmation yet that in fact that is ready to start. Let's take a look at SPX. SPX, very similar story here. You can see that the last 4 days, including today, we've stalled out right at a sideways line of resistance, and we have a rising cycle where we're trading right now at around the rising level of support. But for all practical purposes, we've stalled out for the last 8 days here. We had a series of 4 days that had slightly lower level of resistance, and then the next 4 days slightly higher. But for all practical purposes, you can see how we had strong movement higher before we actually have stalled out, and for the last 8 days, we can't seem to breach this area of resistance. So it is what it is. On Friday, we had a new all-time high. Let me just double check that. Sorry. No, on the 20th, we had a new all-time high of 2175.63 on SPX. Same story as NDX. Strong movement higher on an extended time period. We're looking for the next downward cycle. However, we could break above this level of resistance and start moving lower. But what I think is interesting is the market has decided naturally that there's a level of resistance here. This price movement didn't halt here because I have a line drawn on the chart. It halted here because the market can't seem to find legs to grow above that level. That's usually the first clue that we have some opportunity potentially for movement to the downside. And let's take a quick look at RUT. All right, RUT, very similar situation here. You can see the number of days that we've halted. So we have similar situations on all 3 indexes where they have stalled out at a market-defined level of resistance. And at least today, they seem to be falling away from that resistance. What they're going to do tomorrow, I'm not sure yet. We'll have to wait until tomorrow to see what happens there. But we are starting to see some consistent patterns, as we shared with you on SPX, for example. The short term all the way through the medium term and long term time periods are showing sell patterns, which is the first potential setup for cycles lower. So we're looking for lower potential cycles on all 3 indexes, and it'll be interesting to see when those start and where they move down to. One last thing I want to cover here is the VIX. So the volatility index on the S&P 500, we talked about last week about how low it was relative to history. And we can see that it's starting to pick up a little bit here. What happens is the VIX will start to increase when the price of the index starts to decrease. So we hit a low here on the VIX of 1140. That was on the 20th. And for the last 3 trading days, we've seen the VIX start to increase. That's indication of price weakening on SPX. We also have the volatility index on NDX, which is showing exactly the same thing right here. We see the price starting to move higher. So NDX and VXN are inverse correlations. You can look at the cash index and see the price starting to decline, and you can look at the volatility index and see the price starting to rise. And the same thing is true about SPX and the VIX. They are inverse correlations. So that's the summary for today. I still think it's very valuable for you to take a few minutes out of your day, whether it's with me or on your own, to understand where we're trading relative to long-term patterns. This NDX pattern to me is kind of the perfect setup. If we break above this resistance, we're going to know very quickly that we're moving strongly to the upside. If we fall below the support, well, we'll have to see how far we fall. But last time we were at a low on NDX, we were trading around 41.79, as I said. So we'll have to see where we go from here. So I appreciate everybody being with us in the live trading room. As Michael and I were sharing before, it's always a lot more fun to trade with a group, trade with a community of people, share ideas, share thoughts during those slow periods of trading in what is usually an active trading environment. We get to tell stories and have a little fun, and it just makes it much more enjoyable than sitting here by yourself and trading. So if you're brand new to the live trading room, welcome. Thank you for choosing us. If you're just trying out the live trading room, each day is a little different. And some days we generate huge profits. Other days we have no profits. And then a few rare occasions we have losing days. They actually don't happen that often because we try to be very thoughtful and very selective about the trades that we place. But in the big picture, let me just remind you, if you can harvest $400 a day out of your account, you can make $96,000 a year. On an average, if you can make $400 a day, you can make $96,000 a year. And I think that that's huge. So if anybody is interested in joining us tomorrow at 4:30 Eastern, I'm doing a webinar tomorrow at 4:30 Eastern on the second quarter results of our live trading room account, which is a live account. And we're going to talk about what the market's been doing and what we've been doing in our account. So feel free to sign up. Dorothy has sent out an email, and if anybody has not received that email, feel free to email Dorothy at optionsmoneymaker.com, and everybody is welcome to come and sit in. It's a free webinar to just have a better understanding of what we do in the live trading room and what our second quarter performance results were and year to date. Okay, have a good rest of your trading day, everybody. Thanks.